consumer. First on CNBC's Uber CEO, Derek Khosrowshahi. Good morning to you.
Morning.
It looked like a beat across the board. I want to talk about what happened. I also want to understand what you think is going on with the consumer. I'm also a little surprised by the way the stock market reacted the way it did, at least this early this morning.
Yeah, I think it's very difficult to interpret short-term movements. The fact is that the stock price has done really well this year, and the results were excellent, right? Trip growth of 18%, 3.3 billion trips, gross bookings growth of 18% constant currency to 47 billion, EBITDA growth of 35% up to 2.1 billion, which is a record for us, and then free cash flow. Free cash flow just in the past year has been $8.5 billion, which now you're seeing us use that free cash flow, which for us is a bit of a surprise in terms of how strong it's been, and reinvesting it back into our shareholders with this $20 billion buyback. So we're very, very excited about the growth of the company, the profitability of the company, and we're using our capital to reward shareholders who deserve to be rewarded when the numbers are this good.
Let's talk about the mobility piece of it first. That's the biggest piece of it. What are you seeing in terms of the consumer strength across the board here in the U.S. and maybe abroad as well?
Yeah, we're seeing across the board, both in mobility and delivery, Andrew, the consumer remains strong. In the U.S., actually, what's going on, which is pretty interesting, is that we are able now to modulate some of the increases in the insurance costs, which has been responsible for the growth of pricing in the U.S., which you have definitely noticed and remarked on. As these insurance costs are easing because of a bunch of safety stuff that we're doing, we're able to pass those savings on to the consumer. And it doesn't affect our profitability. We're essentially, taking these savings, handing it over to the consumer. And actually in the U.S. in July, we've seen trip growth accelerate versus Q2 as a result. So we expect Q3 trip growth in the U.S. in mobility to be faster than Q2 trip growth, which we think is a great trend. So for us at this point, we're not seeing weakness in the consumer. It's steady as she goes. And for Uber, that's great news.
What do you make, by the way, we're all looking at these BLS numbers and some of the other economic indicators. I think we're going to show some tape later from an interview I did with Brian Moynihan yesterday. He actually is with you. He's seeing spending going up. I'm curious, within the different segments, though, within your business, are people upgrading? Are they downgrading based on price? Are you seeing any price sensitivity? Is there anything like that?
Different parts of our demographic are sensitive to price, and then there are other parts of our demographic who want a premium product. So what you're seeing from us, Andrew, is actually a barbell strategy. We're really working hard to pass on savings to consumers. So, for example, Wait and Save is now which provides 9% savings on average. If you wait a little longer to get your Uber, is now available in multiple cities in the U.S. We're introducing products like Price Lock for commuters, where you can lock your price, no surge during your commute, and it's resulting in a higher number of commutes as a result. And at the same time, the premium business is doing really well. Premium is now over $10 billion. Up 30%. Our reserve business is up 50%. So both demographics are doing well. Partially, it's because of the innovation that we're bringing forward to target lower demographic and or the premium demographic. So at this point, we're not seeing any weakness whatsoever.
Any thought that there's going to be increased competition on price? It was just, I think, earlier this week that Lyft announced this deal with Baidu. Really the first time that you'll see their app internationally?
Well, I think the Baidu deal was really about autonomous. And the promise of autonomous is to open up, what we think is $1 trillion TAM. As you know, Andrew, we are one of the leaders in terms of autonomous. We're working with Waymo in Austin, where we expanded our operational domain. We launched in Atlanta, and it's been a great launch. The average Waymo in Atlanta is busier than 99% of drivers in Atlanta as well. And we're working with players like WeRide in Abu Dhabi, Wave in the UK, Baidu outside the US, and Nuro and Lucid here in the US. So we're very excited about the autonomous trends. I think before I was on, we were talking about AI. This is physical world AI, and we think it's going to be a huge trend going forward.
What do you think about the, I don't know, I wouldn't call it an experiment, but maybe it's an experiment. They're early days. Tesla in Austin, you obviously have your own data. You're seeing them as a potential competitor, maybe as a partner in the future. I don't know how you think about them these days.
Oh, I think it could be a competitor, could be a partner. And you know, when you're talking about trillion-dollar TAMs, there will be no winner take all in this marketplace. It's great to see Tesla in the market. They're taking their time and they are making sure that they're expanding in a safe way. We've always believed that the potential in self-driving is for these cars to be superhuman in terms of safety. And I think that's a welcome thing, whether it's a Waymo or it's a Tesla or it's a Wave. All of this competition in autonomous is going to create safer streets, and we're going to be a big part of that.
Uber stock, ticker symbol UBER, reported earnings today, and we had a very volatile session. At one point, the stock was down 4%, pairing a lot of those losses to finish flat on the day. And we're going to talk about Uber. Why did we have this volatility, and is it a buy right now? But before we dive in, if you could please go ahead, like and subscribe. It really, really helps me out. Now, Uber is a technology company that provides a platform which connects riders and drivers for transportation and delivery services. It's primarily known for its ride-hailing services, but also offers food delivery, package delivery, and food transport solutions. It operates on a smartphone app, and users can request rides, track their driver, and pay electronically. And the quarter was good. It was actually a really good quarter. I think the estimates were really frothy coming into this quarter, and Uber came in, beat on both the top line and the bottom line, just beating on both the revenue and EPS, 62 cents versus 63, 12.4 versus 12.6 billion, growing 18% and 34% respectively year over year. Gross margins, net income margins, and free cash flow margins all expanded. Very, very solid stuff. Great operating leverage being built here by this management team. As a result, net income was up. Free cash flow was up significantly as well. Specifically the free cash flow, because this is the ultimate arbiter of a stock and a business and the health of that business. $2.4 billion in free cash flow on $12.6 billion of revenue, a 19.5% free cash flow margin. Guys, this is a very profitable business and really turning the quarter. And I do expect this figure probably, even go higher as the year goes on, as the years go on, I should say. The company's balance sheet is also soured. A little bit too much debt for my liking, $11 billion versus $7 billion in cash. I sort of like a debt to cash neutral basis, sometimes even more cash, but it's not really an issue at all. Looking at the financials in a more granular fashion, revenue was up 18%. Cost of revenue was up 13%. So you could see where the operating leverage was built in. Uber continues to build a consistent amount of operating leverage. And you can see this right here. It's because sales and marketing came under control. Uber, there's a lot of word of mouth. They don't need to do as much marketing as they did at the start. They control their selling, general, and administrative expense. In fact, this fell on a year-over-year basis. They kept depreciation and amortization under control. And also operations and support, barely growing at that 2 to 3% mark over the year. And as a result, you had operating expenses that were up 13%, and then net income, which is up 33% for the year. Now, Uber reports in 3 segments, their biggest being the mobility segment right here, worth about $7.2 billion in revenue. Delivery in second place, that grew 25%. It does $4.1 billion in revenue. And then freight does about $1.2 billion. And that actually fell on a year-over-year basis. So the delivery segment is really holding back the overall revenue mix of the company, especially because it is worth about 10% of total revenue. That is a significant amount if you ask me. And at the same time, if we look right here, freight is actually EBITDA negative, only about $6 million respectively. So it is very, very minimal. But, the EBITDA margin for the freight division is actually negative. So there is actually like a case for potentially selling this off, divesting it, which would, impact revenue, but be margin accretive. But for $6 million, I think the Uber team would rather just, hold on to the segment and see if it does really grow into something. Maybe they can find a way to reinvigorate the freight business. That being said, the other two businesses, mobility and delivery, they're highly margin accretive. I mean, if you look at this right here, the mobility segment, $7.2 billion in revenue, right? And they returned about $2 billion in EBITDA, adjusted EBITDA. Absolutely insane. Very margin accretive. Now, when we look at some of the metrics, we have monthly active platform customers, right? So essentially people on the platform per month, 180 million, insane. That grew 15% on a year-over-year basis. And we actually saw an acceleration sequentially, right? So that grew on a sequential basis. Overall trips was at 3.2 billion for the quarter. Again, insane. That grew 18% and another sequential increase. And then when you look at monthly trips divided by monthly active platform customers, that grew 2%. So the frequency of trips they're taking is also growing 2%. So that's really, really good. You have more people on your platform, more people taking trips. You get this figure, that's highly good. And generally speaking, this figure right here, monthly trips divided by MAPC, you want this to be around the 2 to 3% mark. If you're growing at that level, especially for a company as mature as Uber, the company will generally always grow its top line if that is the case. Gross bookings came in at $46 billion. So this is how much money was booked on the platform. That Uber keep anywhere from 20 to 25% of that, and then they pay out the remaining to their drivers, their delivery partners, etc. And that's how Uber get their $12 billion in revenue, and that grew 18% and another sequential increase. So absolutely fantastic. And I believe that's an all-time high, eclipsing what we saw in Q4 2024, which is one of their best quarters, by the way. Q4 is always one of their best quarters just because it's the end of the year, people travel for Christmas, etc. Now, Uber have this Uber One membership. It just entitles you to a bunch of benefits, free delivery, lower delivery costs, savings. You just get premium features. They have 36 million members. Can you believe that? 36 million members. Absolutely crazy. Paying Uber anywhere from $10 to $15 per month, depending on your currency or whatever. And 40% of delivery and mobility bookings happen through the Uber One platform. So this is a heavily engaged customer on their platform. Really, really good. And this Uber One membership is like 100% gross margins or 99% gross margins. There's no incremental cost to just offering this. For those people that do, out of 5, 6, 7, 8, 9 Uber trips every single week. So this is great. Absolutely fantastic. Very similar to, I guess, what Amazon Prime is, but for Uber. Uber is also partnering with a bunch of AV companies. They have 20 partners across 12 cities, and they have 4,000 delivery merchant storefronts. And this is what the cars look like because Uber have built out the infrastructure. They've done the mapping. If you have an autonomous vehicle, you can use the Uber app to actually get leads and to get business for your platform. And our partners are partnering up with Uber. So that was the big bear case. Autonomous vehicles was going to make Uber obsolete, but it doesn't look like that is the case. Now, looking at guidance, the company sort of guides for like gross bookings and then adjusted EBITDA. And the company came out and said they're looking at gross bookings of about 48.25, 49.75. So like 49 billion at the midpoint. This was roughly in line with expectations, but I think why we saw a bit of volatility with the stock had to do with their growth outlook, because they say, as a reminder, our outlook includes the contribution from the close of the Trendyol Go acquisition. Excluding this, our growth outlook would be 16 to 20% year-over-year on a constant currency basis. So this right here is actually maybe a material lowering in guidance had they not included this acquisition. But all in all, I thought the guide was all right, and then adjusted EBITDA came in as expected. So I'd say management guided roughly in line, maybe slightly lower than what the street was expecting, but I think inconsequential. And that is why you saw the stock rebound back to its open price by the end of trade today. Now, what is the thesis if you're investing in Uber? Uber is no more just a ride-hailing company or delivery company, right? They're just a transportation company. Uber is not just getting someone from point A to point B. It's getting certain goods to people. It's helping businesses automate. And you could see here that they're looking to get into various platforms. And this is ultimately the goal. Uber to offer stuff like Uber Jump, Uber Eats, Uber Freight, Uber Rides, Uber Air. And they just keep expanding their TAM if they go ahead and do this. And this is ultimately it. Uber to keep expanding the TAM and to just keep growing for years and years to come, because they are a solidified name across the world. Now, what does that mean for valuation? Now, Uber trades on a next 12-month valuation that's not actually crazy considering the company does 20% in free cash flow margins, EV to EBITDA of 20 times, a PE ratio of 24 times, right? Which again is not crazy for a company growing at about 18% and looking to grow anywhere from 16 to 20% over the next quarter. That is not a crazy multiple at all, considering that the market multiple right now is like 23, 22 times, and the S&P 500 is growing at about a 10% clip on average, right? I mean, this quarter we're looking at about 11%, but for the full year, we're looking at about 9 to 10% growth. That is not a crazy multiple at all, and a shareholder yield of 1.63%. Uber management also authorized a $20 billion share buyback program that could buy back up to 10% of the current market cap. Now, I don't think they're going to use it all this year, but this goes a long way to show that the management think the stock is undervalued, and this is a vote of confidence, and shareholders love to see this. Now, if we go ahead and look at our valuation charts for Uber, I did something a bit different here. I found out what I would need to do to get a 10% return for Uber, right? So we're using consensus estimates through 2029. So revenue growing at about 12%, right? So from 47.4 to 83 billion by 2029. We're using free cash flow margins growing from 19 to 23%. Now, this is actually just largely the consensus estimates for revenue and free cash flow. So you have a company that's going to be doing $20 billion of free cash flow by 2029. And then you have a free cash flow multiple and EV to free cash flow of 24.5 times. Now, to get a 10% return for Uber, you're looking at 15.5 times multiple. So that is insanely bullish, right? So the multiple has to contract a lot if you hit the consensus estimates, right, with the $5.5 billion in net debt and divided by this amount of shares outstanding. So I'm looking at shares decreasing about 1% every single year. You get a 2029 stock price of 147, and that would be a 10% return. And I think there's massive upside to this multiple right here. I also think there's massive upside to these margins. I think Uber could be, 30% free cash flow margins by 2029. This is the consensus estimates, but there's definitely upside, especially with the Uber One program. And as Uber maybe even diversifies away from freight, that could be more margin accretive, or freight becomes a beta positive, and then you actually see an uplift to the overall bottom line. So I definitely think there is upside to these figures with regards to Uber. And a 15 EV to free cash flow multiple, I think Uber can easily trade on 18, 19, 20 times. And then you're looking at, returns of 17, 18% every single year. I peg Uber's fair value at this rate right here at about 73, but I do think that the proper multiple here for Uber would be closer to the 17, maybe even the 18 range. And then the compounded 5-year return would be close to 15 to 17%. So is Uber buy right now? I would say yes. And if we do get to the bottom end of this range right here, right, where we are at the bottom of this like high volume node, that's at about the $83 level, that would probably be a buy, because I do think based on this earnings, Uber's probably going to go back to its all-time highs near the $100 mark. So if you do get like a pullback sort of to that mid 80s, low 80s, maybe you could sell some cash secured puts. I would say go ahead, buy Uber, because we're going to all-time highs after this quarter of earnings, which was a decent quarter in my opinion. And that $20 billion share buyback is the icing on top of the cake. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.